Welcome back, Mish, to another tutorial video here. I've got a little bit of a surprise for you today. I was traveling last week, and when I travel, I like to bring a book. So I actually was digging into your book on the plane, and that gave me tons of ideas for what we can discuss in the videos. But one of the most compelling points, in your own words, is not only the power of phases, which is what the book is all about, but clearly we're not going to go through the whole book here. But one of the most compelling points was the trading and the paying attention to markets during phase changes. So before we go into phase changes, I think we should take a step back and have you explain your wheel of what market phases are, and then we'll look at what phase changes are and some current examples of stuff that you're looking at. So let's start with this wheel.
Okay, well, first of all, thank you for reading my book. Actually, I've been thinking that I should read my book because it's been a while. And every so often I find little pearls of wisdom if I just sort of glance at it. So thank you. And yeah, the book really, the idea of the book was to use the phases and really basically give you a navigation system. So that's what the phase wheel is a navigation system. And that's why I like it, because it's kind of like when you're driving, if you know the direction you're going in, when you have your navigation system up in your maps, north, south, east, or west, you certainly don't get lost as easily. So that's the spirit of this. And so this is not something that I created. When I did my book, I did research, and people have been talking about phases since Charles Dow. However, after many, many years of research and using the phases in different ways, marketgauge, and actually Geoff and Keith came up with the idea of the 6 phases, and I latched onto it. So let's give credit where credit's due. So you can see that it goes sort of in a clockwise fashion from bullish to bearish back up to bullish, but that doesn't necessarily mean that the phases always follow so smoothly. But the bullish phase is obviously, if we're looking at it from an emotional standpoint, it's a euphoric period of time. People are really excited about the market or the condition of the stock or the condition of the indices or a particular sector. But essentially what it looks like is we use 2 very simple moving averages, and that's the simplicity of it, the 50 and the 200. My book covers the weekly phases, Geoff, but it's certainly applicable to the daily, and that's what we're going to stick to today. So if you have the 50 over the 200 and you have the price over both moving averages, that's a bullish phase. And I think it'll be easier to get into that more when we have some examples. But of course, as we know, Murphy's Law, right? When everything's going great, something is bound to give, the one shoe drops. And that's when we go into a warning phase. And the warning phase is very interesting because sometimes that's just what it means. Warning, liquidation, some headline, something that spooks the investors, but not necessarily the end of the bull phase, just more of a pause. And that would be the 50 still over the 200, but the price, which has been trading above the 50, comes down below the 50. So if we just stop there, sometimes we'll see in the examples, the price goes above the 50, below the 50, above the 50, below the 50, before it makes up its mind what it wants to do next. If the decision is for more deterioration of price, then it goes into a distribution phase. So now we still have the 50 over the 200. But the price is not just broken down under the 50, now it's broken down under the 200. And a distribution phase actually literally means that there's a distribution in that cash is coming out of the market. So that can be a really interesting time in the market because it could mean the precursor of much worse things, or it could be that we've just had some kind of a normal correction. And as you know, the public tends to sell at the bottom of these corrections. And so that's why distribution phase is really interesting, because if it flips back up to warning, buyers have come in. But if things go from bad to worse, then we go into that bearish phase.
Yeah.
Do you want to say something, Geoff?
No, I was just agreeing with you.
No, okay. Well, if bullish is euphoria, then bearish obviously is pessimism. And I like the bearish phase, though, not so much because I like pessimism, but because I know human nature. Human nature is that we don't stay pessimistic very long. I mean, that's what makes us humans so wonderful, is that we eventually come up with hope. But before we get there, the bearish phase now, for the first time, we're seeing the 50 cross below the 200-day moving average. That's what they call the death cross. So aptly named. And again, depending on where the price is, it's under the both moving averages. But sometimes by the time the death cross happens, the price is really, really down far. And so we're going to talk a little bit about the best time is when the price and the moving averages are all lined up. That's the inflection point. But nonetheless, as I was saying before, this pessimism often turns to positive. I mean, I think the classic example, of course, would be 2008, when it looked like the world was coming to an end in terms of the stock market, and people were going through tremendous PTSD for years. But what we saw at Market Gauge, Geoff, was in 2009, a lot of especially the sectors that had been really destroyed, like 60, 70% of a correction, we're now starting to get back up over that 50-day moving average. And that's where the hope comes in. That's my personal favorite phase. That's a recuperation or recovery phase. And now you still have the 50 under the 200, but the price starts to get back over the 50. So what that's telling you is that maybe the selling is dried up. And then if things are really good, I mean, we may see recuperation go back down to bearish. You know, new sellers could come in. It could be strictly nothing more than short covering. But very often, especially like we look at 2009, when the Fed started putting a lot of liquidity in and saving the banks, it really was the bottom. The hope was coming back. So now if the hope continues, we go into an accumulation phase. So now all of a sudden, this is really where you start to see the institutional investors coming in, because the price is going back over that 200-day moving average. So the 50 is still under the 200, but the price has jumped both of those moving averages. Opposite of distribution, we're getting an accumulation of cash back into the market. And then, of course, if the news continues to be good, then we go back to that bullish phase. So that's the beautiful circle of it. And that's the beautiful navigation, because what those moving averages and phases do is tell you exactly where you are at any given time in terms of the direction of what that particular instrument might be doing next.
Yeah, and we'll jump to the charts, but one thing, and I think you'll probably touch on this, with the market in such a bullish trend right now, it's just a great time to just be keeping your eyes open for the warning phase, the number of warning phases that start to creep up. You know, in big view, we've got a table of the major sectors, and it's really interesting to see that we've gone from all bullish phases to the warnings are beginning to creep into the picture.
Yeah.
And one last thing with that is that on one hand, that's a negative. It feels negative when it's kind of selling off, but it's also potentially the opportunity if it's just a slight pullback to that 50, and then you start seeing the warnings disappear. They go back into bullish. It is a really easy way to see the ebb and flow of the big picture.
Exactly. That's, I mean, exactly what we said in the very beginning, which is the bullish could go to warning, could go back to bullish. A 5%, 7%, even 10% correction could put things into warning, but the buyers show up. It's when the buyers stop showing up that you know that maybe the market is going to have a much more sustained correction.
Right, right. Okay, so let's jump into some charts.
Okay.
And I'm going to... so this is just the SPYs. And before we got started here, we were talking about which stocks you might be interested in. And one of the first things you said was, I think, noteworthy, which was, well, when you're in a market this strong, you can't expect the same types of opportunities around the phase changes. So I'll let you just comment on that before we dive into the stocks that you're looking at or you think we should look at.
Yeah, I mean, the most exciting time to use phases is when you are really seeing a strong pivot in the market, whether it's a pivot from everything is up and now it's starting to sell off, or everything is down and now it's starting to come back. What we have here is a very difficult time to actually see phase changes because so much of the market has already been in a very long extended bull run. And yet that word bifurcated, which I kind of have a love-hate relationship with, there are so many instruments on the other side of that have just been beaten up for so long. So, trying to find the ones that are kind of in the middle, getting ready to move up or move down is not as an easy task as it would be if we were looking at the market, let's say, if you're looking back at October a year ago, right, when the market sold off and then the SPY came back. And at that point, it was almost like, oh my God, it was a candy store at the end of October, November, time to almost find anything that looked similar to the SPY or even the SPY itself, because look how beautiful that was. So, what you're seeing there is a classic example of a distribution phase, right? We had the price break down under the 200, but notice how the moving average never, ever, ever crossed into that death cross. The 50 stayed above the 200, so that kind of told you, especially after the price went back over the 50 and the 200, that this was just, for whatever reason at that time, a correction, and it was time to buy again. So that's probably a little more advanced to have that type of analysis. We're going to try to keep it a little simpler, but we really wanted to bring it up to you because we were searching. Jeff and I were searching for what stocks are just about to make a phase change, and we had some trouble. And this is the reason why, because we're in this extended bull run, and yet we have stocks that are just been like hammered.
Yeah, and so this is actually this segment right here is really good. You go into warning. Let me delete this. You're in warning here. You're in distribution here. You're back into warning here. Now you're right back into bullish. Weak bullish because the moving average is sloped down. Maybe we'll get into that. But here's the warning we were just describing that turns back into bullish. So this keeps the warning mentality keeps you out of trouble so you don't end up in something like this, but lets you get right back in when everything looks good again. And, to your point, when you're so far above the moving average here, you're not going to find as many opportunities in terms of the bullish side looking like great phase changes.
Especially if you're a market timer. I mean, passive investors don't care. Because I sit and watch so much information coming through Twitter, X, there's so much information. People are saying, well, I don't care if it corrects. I just want to be long, but that's not what we're about. And I will say the other thing too is you mentioned slope. So it's very easy way to discuss slope. In my book, that's one of the things that I talk about. I kind of bring up my special ed training. If you think about a conductor pulling 50 cars versus pulling 200 cars, obviously you can accelerate a lot faster when you're only pulling 50 cars than you can 200 cars. And the same thing on the reverse. If the conductor hits the brakes, then the 50 cars can actually stop and start to even go in reverse a lot quicker than the 200. So if you think about the slope, like a conductor pulling trains, if it's just slowing down, but the slope is still up, it's telling you that it hasn't really changed the direction or the momentum of the instrument. Only if the slope starts going down do you get nervous. And right now, look at how strong that slope is. Now the price is kind of far away, but that would obviously be something to look for, right? As if we see the price break down under the 50 and the slope start going more neutral to negative. That's why I laugh when I see people making these massive bearish calls, because I don't know what they're looking at. Certainly they're not looking at this current chart.
Mm-hmm. All right, let's look at some stocks. What stocks do you think we should point out at this time, just to give some examples of?
Well, let's look at well, we have earnings coming up too, so this is a good time to look at two stocks that haven't reported yet. One would be Google and one would be Microsoft. Like I said, we kind of had a little bit of slim pickings in finding stocks that had great phase changes coming up. But Geoff's got Microsoft here, and I'm particularly interested in Microsoft right now because it does report earnings. They have obviously a lot of announcements about AI, and most recently, since Geoff and I were talking about the whole clean energy through of nuclear, they made a big investment in that too. So, it's interesting when you see a stock that makes a lot of investments. That generally means the stock's not going up because they're spending money. They're actually spending money on the future, and they haven't necessarily been buying back their own stock. So how would I look at this right now? Well, clearly we have the earnings coming up at some point. I don't know the exact date. But notice how the 50 and the 200 are like in line with each other right now. That to me is a very interesting time because it's called a convergence. To me, it's called a convergence. So it either means that the 50 will start to escalate away, and the slope is still up there, by the way, in both the 50 and the 200. It'll start to escalate up and away from the 200, or it will start to turn down. We'll have a death cross, and that would mean lower prices for Microsoft. So would I necessarily just be jumping in over two closes, which I like to use, over both moving averages? Well, maybe, depending on the rest of the market, but probably not. So this is where a little bit of other types of information come in handy. So you want to look at the price, look how it's had two times over the 50 and then a breakdown. And then it went back over the 50 and closed below it. Now we've had two closes underneath the 50 and the 200. It kind of scraped it today. So I want to look at the bar when it cleared the 50, right there with Geoff, just because Geoff and I know exactly what we're talking about here together, that 425 level. So one of the ways you can use when you have this kind of a stock, where you have a channel or a trading range, and you have, obviously, the momentum can go either way, you want to be able to get over the most recent high, and that would be 425. So that would put you over the 50, over the 200, over that high. And if you take the cursor and just go draw that line to the left, you can see that 425 has been kind of pivotal anyway.
Yeah.
So that's how I would use the combination of phases, convergence of moving averages, and then clearing an actual obvious chart point.
Right. So the phase change isn't or doesn't have to necessarily be one or two bars that just go through the moving average. The phase change can be an area, and the consolidation around that phase change actually can turn it into an even more compelling pattern. But for right now, we'll keep it pretty simple.
Well, and here's where the slim pickings come in. I mean, those of you who know, all I've been writing about basically has been these massive trading ranges. So while the SPY is making new highs all the time, we've got Modern Family just kind of trading in a range, and that also is interesting information. But let's move to MSOS, because that might be maybe one of the more interesting charts we looked at today together. The cannabis one, MSOS. Okay. Now, we know that this is a highly emotional trade. It's also a highly politically motivated conversation right now. But notice how it's been below the 200. You had the death cross. So we talked about a golden cross. So the death cross is when it goes from it's been in distribution as it was like in June and July. It tries to get back over the 200 and never quite makes it. And you can just see how the slope on the 50 went down and down and down and down till we finally had that death cross there right in the middle of July. And since then, we have not been above that 200-day moving average, but we've kind of bounced around the 50, as you can see. So had you bought it when it broke out of the 50 back in middle of August, let's go back to middle of August. Yeah, we'll go back to that. But
sorry, middle of August here.
Yeah, middle of August. Notice how it had a confirmation. It actually got right over the 50, but look at the slope on the 50. So that would have told me that it's kind of a weak phase change. So I like to use slope. And it's don't even worry about the physics of it. Just think slopes down, kind of weak, slopes up, better. Now let's go to where we are right now. So right now, cannabis broke back out over the 50, but look at the slope on the 50 right now. It's not up, but it's not down. It's neutralizing. So to me, this would be an interesting time to possibly get into something that may have finally exhausted all the selling ahead of the election. We do know that after the election, the Congress is going to meet, but you don't even have to know about the actual fundamental part of it. What we do know is that this probably wouldn't be a bad time to get long on a starter position based on the phase change, number one, but probably really wait in terms of adding to a position when it goes from a recuperation phase into an accumulation phase, because it has not been 2 days over that 200-day moving average since last May. So that may be one of our cleanest charts that we're going to show you today. Plus, it has a whole lot of consolidation, just like everything else.
Yeah, and the other key level right here, right? So if you've got this consolidation around this phase change here, it's nice and close.
Right. Okay, so we also wanted to talk about Google. Now, I have no intention of trading Google, only because, when things start to be too much of a political football, I kind of stay away. MSOS, I'm kind of more willing, because I have been of the mindset that cannabis will be legalized, or at least federally controlled at some point. But Google, I mean, there's the antitrust news that comes out. It seems like it comes out a lot, too much for my blood. But what's interesting about this chart is if we go back, this was a huge, huge run in Google, right? That same time period, well, it took a little bit longer, really, when the SPY set up in October 2023. This was actually also trying to set up, but it kind of fluctuated around. It's one of the reasons why I don't love this stock. But I thought it would be a really good example of what's happening right now. So again, but even if you got chopped up a little bit, in February, March, when it broke out over the 50, it went back into that bull phase. This is a great example of it going from bull to warning, bull to warning, bull to warning, bull to warning, never really breaking down under that 200 except for that brief moment in time in March. And then you had that wonderful run. And then you had the breakdown under the 50. And notice that when it broke down under the 50, which was in July, August of this year, notice where the slope on that 50 was going at that point. So can we stretch that out a little? Yeah, let's stretch that out a little.
Yep. One sec.
Yeah. So, I mean, this was great because not only, I know this is not about calendar ranges, but, it's exciting when you have a lot of confirmation. So you couldn't get through the 6-month calendar range high, which is that horizontal green line. Then you broke down under the 6-month calendar range low, and then you broke down under the 50, and then you had that gap, and you had a really big move down. I mean, essentially, it went from like 178 down to around 145, which is a very significant move down for this stock. So what's happened since? This is why it's on my radar now, because it came back through the 200, never got into a bear phase. Notice that the 50 never crossed down below the 200. And now here we are, above the 50, above the 200. The slope, kind of like what we just said about with MSOS, is sort of neutralizing, still up in the 200, but neutralizing in the 50. And the price is kind of dancing around. This is just, we're talking about market condition right now. The reason why we have to show you these charts is because there is so little to choose from. But this is another classic example of right now the phase is back to bullish. It hasn't had its earnings report yet. And you can see it hasn't really gotten through 170 since a while now, several months. So you could actually even say, you know what, I would take a chance over 170. And you could still risk down to the 50, assuming maybe the 50 moves up a little bit, and having basically a $8 risk in something like Google for more of a position, if the market continues to look good, would make sense.
Yeah, for sure.
Yeah. especially if you think it can make a move back up closer to like 180. So
Yeah, new highs is over 190. So if you're
yeah,
risking $8 to make 20,
yeah,
that's not terrible.
that's not terrible. So what else did we have on our list?
There's another one in an interesting position that isn't exactly a phase change, but it is the same concept, which is DBA.
Oh,
Happens
DBA.
pretty timely right now to
Yeah.
be watching, right?
Well, we talked a lot about when something is actually physically changing the phase. And
Right.
yeah, but what happens when you miss the boat? What's great about missing the boat? First of all, you do not want to buy when something has changed phases and now you finally get you see a headline about DBA or a headline about NVIDIA or whatever. And you go, oh my God, I wonder if I should get in. And you can see that the price is so far from the moving average. That to me means that you've now taken on way too much risk, because also mentioned in my book is that the moving averages act almost like a magnet. At some point, not every stock, but at some point, we often see the correction back down to the scene of the crime, if you will, where it broke out from. And that's exactly what's happening in DBA. So we have a strong upward slope in the 50. I'll just mention briefly, it is over the July 6-month calendar range high, so it's in an uptrend. And today it actually closed a little bit lower, but if it starts to turn around from here, I would say, does it have to hit the 50 exactly? No, but it gives me sort of a demarcation, and the line that he's showing you there really lines up well. So you're talking about somewhere around 25.20 in DBA, which would be a really interesting risk point.
Yeah. Phase change we generally describe as it's gone from one side of the moving average to another. But just coming back and correcting to the moving average, while it's not technically a change, you're still trading around the area that's so important, which is defined by the condition of the phase or the moving averages. So,
Right. So let's look at one that has been hammered to death and how I would trade it. If if I was really just keeping it simple and waiting for a phase change. I think, what did we say? ELF was the example.
Alpha's one, yeah.
Yeah. Okay. So, I've been talking a lot about this stock, ELF Beauty, for two reasons. One, of course, is because I think that the vanity trade, the new thin consumer, if you will, from the diet drugs, will enter the market for things that are skincare and makeup. This particular company is global. This particular company also covers all complexions, which is a plus, right? Now, this stock had been the darling of the market up until May, June, July, when it had, I don't know what the news was then, but obviously something happened that killed this. Most likely, the projection for the earnings went down. But I did some research into this stock, and the projections from the earnings are still not quite as high as they were, but they're talking about forward guidance for 2025 being better. Okay, so that's the little backstory. But the question is, if ELF is really good, and by the way, look at that massive double top, Geoff. You had, February one top, and then you had the other top there.
Yeah.
Yeah.
Yeah, I think it was really fears of just growth slowing down. It's
Right.
not that anything's necessarily gone terribly. So
And so I still believe in this company. So essentially, what I'm seeing now is we have a real sharp slope down in the 50-day moving average. You can see where we had the death cross was the worst place to go short, because if you bring down where the price was at that point, it was already down there. I mean, that would have been a terrible place to go short. So it's a great example of, you really kind of want your price close by. So now what this is telling me is that if we can get some movement here over that 50-day moving average, and we start to see the slope on that 50-day moving average level out from its very dramatic descent right now, that would be a classic example of something that I would buy on the basis of the fact that it's been in this bear phase. It's only been in it since September, so it's not really long. I like them when it's really, really been beat up for months and months. But nonetheless, I would say this would definitely maybe drive me in to ELF, 2 closes over that 50.
Mm-hmm. Yeah. So you can just kind of hang out and see. I zoomed in a little, but if I zoom back out, you can see that. I'm going to try this. You've got this line right here. What's that? The 100 and a nice big round number.
Nice big
So
round
if you're
number.
questioning, is it going to hold 100? That's where it took off from its last correction to the 200. Well, let's just wait for the phase change and let that be the guiding light.
Exactly. I bought this stock and actually went on Fox and talked about it at 105. But that's not something that I would necessarily advocate. I bought it against that low at 100. I thought it looked good. Now, I've since gotten out, by the way, so I'm not in it anymore because at this point now I realize that this is a treacherous game for buying these really beaten up stocks until you actually see a good reason, which would be the phase change, which is exactly what we're talking about.
Yep. Yep. All right. And anything else? Those are some great examples. Working now, looking forward, different ways to use it. There's still a ton more in the book, but that covers it for now. And I'll just re-emphasize something you said before, that the book focuses on the weekly charts, and this is just as applicable to the daily and the daily and weekly charts. The analysis is the same.
Exactly. And the reason why I did the book more to the weekly is because I made the assumption that most investors aren't quite as active. And so therefore a weekly phase change would be even more powerful, because it would actually mean now that you're crossing the 50-week and the 200-week. So you're talking about a year and then 4 years, a phase change of something that's been going down for a year to 4 years, when it finally reverses, as we know, can be really explosive.
Yeah. All right. I'd call that a wrap. Do you have anything else, Mish?
I think that's it. Thank you so much, Geoff. Another
All
great
right.
question.
I think that's a bye for now.
Bye for now.